All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today I want to talk about rising cryptocurrency prices and is the FUD over just yet? We can take a look at the coinmarketcap.com and all of the coins. Virtually everything is green, albeit Tether. And I love seeing that juicy, juicy green. I know you guys want to hear me say it, so saucy green. So I want to take a look into that. I want to talk about some things that have happened lately and maybe a little bit of price speculation towards the end of the year and possibly some strategies with that. So everything is virtually everything is up. That is, even if you go to the next 100 coins on the page, everything way up. PayPal's way up there, 195%. So first of all, I want to talk about something that I've already talked about a little while ago, is that every single January is a huge dip in crypto prices, and that's usually due to the Chinese New Year. Of course, the holidays, people sell off some of their crypto for a little extra funds and things like that. But the Chinese New Year is really huge. It might even be bigger than Christmas, if you can believe that, just due to the fact of so many people in the Asiatic region. So you can see early 2015, it bombed out, lowered in there, lowered again in 2018. And as you can see, the prices typically kind of rise back up after, towards February, that is, once it's all over. So it's not surprising that prices are going back up. It would certainly be a fairly wise idea to invest now. Of course, there are going to be some people that are going to wait a little bit just in case there's another dip to pick it up again, pick it up at a lower price, that is. But I don't think it's going to go too much lower than this. If it does dip again, it'll just be, you know, the market doing what it's doing. But eventually, it's just going to come back up, and throughout the year, I think it's just going to keep on rising. Of course, there's going to be dips throughout the year. Every few months or so, there's just pretty much always something that comes along that dips Bitcoin and the other cryptocurrencies. But not to worry. You know, the longer that you're into crypto, the more dips you see, and the more immune you become to them. Eventually, it's just like, this is just another day. This is a good time to pick up some more crypto, particularly if you're using the DCA investing, which is dollar cost averaging. So let's say every paycheck, you know, maybe every week or every 2 weeks, you put in $100 or $200 or whatever you can afford. And so with dollar cost averaging, you're putting in the same amount, but you're getting different shares every paycheck, because if the price of Bitcoin is 10,000, you get such and such shares of Bitcoin. And then if the price goes down to 9,000 your next paycheck, you're getting a little bit more shares of Bitcoin, regardless of the fact that you're putting in the same amount of money. So if you're keeping up on that DCA, then you have picked up quite a bit. The lump sum investing is also another strategy, but it is much more risky than DCA. So let's say you just lump sum on Bitcoin right now, and then it goes down to 5,000. Well, you missed out on quite the dip there, and you could have picked up quite a bit more. But with DCA, your risk is greatly reduced. You know, if you bought $100 or $200 at 7,000 and it goes down to 5,000, not too big of a deal. Then maybe just that next week you pick it up at 5,000 again. So that's DCA investing. I think it's just the safest way to go about it. So I think all the FUD is over for now. There was quite a bit of concern of various negative news and events that have occurred, but I think for the most part, everybody has sort of learned their sold early lesson by now and are starting to get a little bit more immune to it. And again, it always dips in January and starts to come back up anyway. So I do want to talk about the Security Exchange Commission hearing that just occurred. I think it was today, or maybe it was yesterday. No, the morning of February 6th, which is, yes, yesterday morning. And now that had a little bit of fear for a lot of people, because during these meetings is when people start to speculate on taxation and heavy regulation. Sometimes outright bans come out of the Trading Commission meetings. But in this one, it wasn't too bad. So the morning of February 6, 2018, to discuss their roles in blockchain, virtual currencies, and ICOs, set in Washington, D.C., at the Dirksen Senate Building, the Committee on Banking, Housing, Urban Affairs met in open session for about 2 hours. Before the hearing began, testimonies were released on behalf of both witnesses. So, a few things from this article. If you guys want to check this out, it's pretty easy to look up. It's on Cointelegraph at the moment. Despite his optimism, the chairman still stated that digital currencies will likely require more attentive regulatory oversight in regards to fraud and manipulation. And this is kind of what I'm talking about in some of the videos that I've made in the past, talking about, is government regulation a bad thing of cryptocurrency? So in nowhere here in this article or during this meeting were they talking about the government taking full control over Bitcoin or cryptocurrency or outright banning it or anything like that. They're really trying to protect against fraud and manipulation. Now, I'm not going to throw away the idea that, of course, the government probably doesn't like cryptocurrency in a lot of ways because, of course, it does challenge their authority, if you will. And of course, governments want control. They want control. They want control. But it's really up to us as the people to make sure that we tell senators and congressmen that it is not cool for them to ban, that they won't be voted back in if they do such a thing. And I think they're actually somewhat aware of that. The chairman, Jay Clayton, the chairman of the SEC, was a little less excited about virtual currencies, but he wasn't denying their role in the modern financial system. And I'd like to read this quote here. The simple approach is well recognized as the enlightened regulatory underpinning of the internet that brought about such profound changes to human society. During the almost 20 years of do not harm regulation, a massive amount of investment was made in the internet's infrastructure. It yielded a rapid expansion in access that supported swift deployment and mass adoption of internet-based technologies. Internet-based innovations have revolutionized nearly every aspect of American life and the world, from telecommunications to commerce, transportation, and research and development. So the do no harm was unquestionably the right approach to the development of the internet. And this is definitely true. So there hasn't been too much regulation of the internet. And it was a sort of a do not harm sort of situation that has been going on for a long time. And that's why the whole, free internet thing is a huge thing. Like, nobody wants, everybody wants net neutrality. Nobody wants, the corporations to take it over and have these packages and banning of certain sites. That's just not good for mankind overall. And the world recognizes that unquestionably, except for, a few at the top who want to make a little extra money. But with the world against them, it is pretty hard, to say the least. So, they still admitted that there lay many traps. At the same time, regardless of the promise of this technology, those who invest their hard-earned money in opportunities that fall within the scope of federal security laws deserve the full protection afforded under these laws. This ever-present need comes into focus when enthusiasm for obtaining a profitable piece of new technology before it's too late is strong and broad. Fraudsters and other bad actors prey on this enthusiasm, and that's why we see scams, these ICOs that pick up and go, and it even is mentioned here. So they mentioned the word ICO once in his testimony. Clayton mentions it 132 times. And so a recent study has found that 10% of all ICO proceeds have been lost to hacks and fraud. And so basically 10% of ICOs, you give them money, you get nothing back. You give them money and they take off, or they ended up getting hacked, or it's just, like I said, an outright fraud. And that has occurred numerous times throughout cryptocurrency. That's why I take a fairly strong stance on ICOs. If you have a crypto YouTube channel and you have even remotely decent sub count, we're even talking like 800 subs plus. Now, I understand and I recognize my position in YouTube as a pretty small YouTuber. I really appreciate every single sub that I get. I'm nearing 11,000 subs. That's absolutely fantastic. But even someone as small as me gets bombarded in my email with ICOs and paid promotions. So they'll say, well, we'll pay you, get a hold of us if you want to promote this, or check out this new ICO, we'd like you to review it on your channel. And they're not necessarily sending that to just me. Some of them are to just me, you know, so maybe from time to time, but most of them are just pretty much copy pasted. Oh, we love your channel and follow you all the time. We watch all your videos and blah, blah, blah. So it's really an unpersonalized, non-customized cookie cutter response, boom, 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 sent out to YouTuber after YouTuber after YouTuber to promote their ICOs. And I don't respond to any of those. Quite frankly, because most of the ICOs are incredibly confusing, make no sense. At least half of them are totally useless, and the other half are outright frauds or ICOs that you cannot confirm if they are real or a fraud or not. So I don't respond to them, and I won't put them on my site or on my channel. Now, I have been talking to a good friend, and he has a good friend that has been into Bitcoin since its start, and he will be coming out with his own ICO, and I will probably promote that on my channel. I doubt I'll be paid for that or anything like that, so don't worry about that. But I think it's going to be a really good ICO, and I'll bring that to you guys when I see that. And what they actually plan to do with the money that they receive for the ICO to generate and sell the coins is that they're actually going to take that money and then rebuy more coins from themselves, basically to inflate the price even more and just have a really good ICO. So it's not like a cash grab ICO. It's probably going to be a genuine ICO. If it turns out that it's not, I won't make the video, but I have a good feeling that it's going to be a pretty good one. So there's that. And so the government overall right now is looking pretty good at cryptocurrency. It is interesting to note that some governments do not like Bitcoin, but they like the idea of blockchain and, you know, the distributed ledger. So I think it was even Ben Bernanke. If you don't know who Ben Bernanke is, he was the former chairman of the Federal Reserve of the United States. So pretty much the great evil, if you will, in a nutshell. And he was quoted, and I'm paraphrasing because I don't know the exact quote here, but he basically said that they don't like Bitcoin, but they do like the idea of blockchain. Now, that's pretty scary, because I can see governments eventually coming up with a blockchain for their currency, because here's why. With American dollars as it is, or if you're in a different country, honestly, it's pretty much the same deal. So whether it's pounds, euros, American dollars, yen, anything, it's distributed all over the place. So even the Federal Reserve, the government has no idea how much money is in circulation, right? I have some money in my wallet, you have some money in your wallet. You know, you could take a $5 bill and throw it in the ocean, and that's one less $5 bill that's left in the world, right? But the Federal Reserve doesn't know that you just threw that dollar bill in the ocean, or that $5 bill in the ocean, and they don't know that it's gone, so they don't know to produce another one. So instead, they're just producing money, and it gets inflated, it gets deflated, they destroy money, they make money. So they don't really know how much money is in circulation. Sure, they have a fairly good idea, but with a blockchain, they would know exactly how much is in circulation for the most part. You know, I guess you could have some on a, you know, on a USB stick or like a Trezor or something like that, and then throw it on in the ocean, and nobody would know that it would be gone. But for the most part, it would be much, much more manageable for a government. They could create an exact amount, and they could remove or burn an exact amount. They could increase inflation, deflation, interest rates, anything they wanted with blockchain, exactly to the T. Whereas money, it's all just paper, and it goes around, and once they hand it out, it's gone. They don't know where it is. They don't necessarily know where it's going once it reaches banks and goes out to the people. So I think government blockchain is going to be a really bad thing. So just keep that in mind. Now back onto the real topic of the crypto prices going up. So everything is going up, and that's super good. And I think it's a really good time for people to buy in. And now that's not necessarily investment advice, but if you take a look at the charts, Bitcoin's pretty low right now. And a good time to buy in is a good time to buy in. So it's pretty obvious. So I came across this article. It says Bitcoin price warning: crypto to reach 100,000 if it holds on to this key metric. And on CBC News here, this person says that it will go to 100,000 because we have 230 trillion right now in the world tied up in stocks, cash, bonds, and gold, and all four of them are overvalued. Now, I'm just not so sure about that. So when you see these ridiculous prices, you know, take it with a grain of salt. Is Bitcoin really going to go to 100,000? I'm not sure. You know, it might, if it does, I think it would take at least a couple years to do that. Here's why. I think if it went to 100,000 by the summer, or even by December of this year, 2018, I think that would be inorganic growth, and it would lead to another crash. Because when things move up really quick, you have to watch out for that. When you see a price shoot way, way up, it's almost certain that it's going to go way, way down pretty quick. Let me give you an example of that. Let me give you the perfect example of that. And I actually called this out. I actually said this to my wife as it was happening. And let's see if we can go back to a month. I might have to do 3 months. And here it is. So Litecoin was slowly moving up. Now, this is very organic. This slow movement here doesn't cause people to panic and then sell a whole bunch. And it also doesn't cause a huge panic to buy. Both are really good things. Now, you might think a huge panic to buy is a good thing, but again, it's just going to lead to a pretty quick dip. So what happened here is you can see Litecoin going along, going along. It's just like that Price is Right game where that mountain climber, and all of a sudden, what even happened? Now it's $400. So it went up fourfold. It went up from $100 to $400. So now everybody that sold at $400, wow, you made a lot of money. Good on you. But everybody that bought at $400 or bought along this way is sitting and hodling their Litecoin and waiting for it to go back. Is it going to take a month? Is it going to take a day? Is it going to take a year to go back? Couldn't say. But this kind of growth right here is not good, because look what happened shortly after that. Whoop, now it's way, way down. Now, it wasn't necessarily caused by just Litecoin, mind you. I don't think it, you know, so don't get me wrong there, that it wasn't Litecoin alone that caused this dip. But when there's a huge buy-off, it's usually followed by a huge sell-off, because people start to see it getting at $400. They start to get a little bit nervous, and they know they got to sell now to get their maximum profit, and that's pretty much what everybody does. And as you can see, when it comes down, then people start to think, well, now it's a really good price because it was at 400. And it's going to go back to 400. So then they buy in, and it kind of goes up a little bit and then dies. So inorganic growth is not good. And it's very easy to spot it, plain and simple. When you see a mountain like this, and this isn't even a mountain, this is a straight up wall that you drive it. This is a brick wall. And they're just not good. It's just not good. It's not organic. It doesn't lead to people hodling and people slowly buying and people slowly selling, which is what all the juiciness of a market. So I want to show you guys this as well. I came across this. It says, here's all the money in the world in one chart. So it talks about a lot, and you know, I urge you guys to check this out. It was kind of an interesting article. And where do I want to be here? Okay, so funds invested in derivatives alone total at minimum, $544 trillion, and the high-end estimate is 1.2 quadrillion. So, you know, it starts to talk about all the money in the world, and it talks about it in various ways. So here's silver, little old silver sitting there, and this is cryptocurrency. This is Bitcoin. And I imagine that's Ethereum and maybe Litecoin or something like that, or maybe Ripple. And then this is the biggest companies in the world. You can see Microsoft and Apple, they're kind of up there. And the 50 richest people in the world. California's GDP, which is the highest GDP in America. For anybody that doesn't know, California's GDP is massive. I think if California were a country, it would be like the fourth highest GDP in the world. They could basically raise a bigger army than most countries in the world. Just goes to show. So the federal balance sheet, you know, the currency as a whole, so China, the Eurozone, the rest of the world, USA, Japan, gold itself. You know, I think I read somewhere, too, that all the gold mined since the dawn of time, you know, since humans were mining gold, is approximated to fit under the Eiffel Tower in like a little triangle form. So, you know, believe it or not, you know, we have not mined much gold in the world. And although it is worth a lot, and I would love to have a pile of gold that big, when you think about it, yes, the Eiffel Tower is pretty big. It's quite an impressive feature. But to fit it under the Eiffel Tower, not completely jam it under there, just, you know, it fits well under there, its size. So that's kind of an interesting thought as well. So the stock markets, global money supply, and then global debt, of course, is incredible. And global real estate. And then this is derivatives. Wow. So it just destroys. And then, yep, that's a lot. And then Bitcoin. So, you know, we're talking about a total of anywhere from, and it's incredibly hard to calculate all the property in the world, all the housing in the world, all the derivatives, stocks, and everything like that is virtually impossible. Now, there is not $544 trillion, or even dollars, pounds, euros, all stacked together in the world. But in terms of, you know, the derivatives and stocks and the values of homes and things like that, it could equal 544 trillion to 1.2 quadrillion. So that's where this person is getting this $100,000 price, you know, sort of dividing it into the amount of Bitcoin. And then, you know, you kind of get with about $100,000 per Bitcoin or maybe more. And so people kind of pull these numbers out. I've heard 50,000. I've heard 100,000. I've heard 1 million. I think it was, you know, what, like John McAfee that said it would be some odd price, or he'd eat his dick on live TV. So take all these massive prices with a grain of salt, and at the same time, disregard them, because what does it matter? In a sense, are you waiting to sell Bitcoin at 100,000, or are you waiting to sell Bitcoin when you're good and ready? So that's really the question, is the goal for yourself. I mean, look, what are you hodling for? Are you hodling for, I always find hodling funny because it's pronounced wrong, but what are you hodling Bitcoin for? You have to set a goal for yourself. Are you doing it for retirement? Are you looking to buy that Lambo? Are you looking to buy a house? Is it something realistic? And you're like, you know, I'm just going to buy, you know, a Jeep, you know, just a $15,000, you know, $20,000 Jeep or something like that. So it's all about what you think you should sell it at. So I want to talk about a little bit of a strategy that you can take with a grain of salt. Hate to keep saying it, but it is what it is. And so I want to talk about this dip every January. And when is the height at the end of the year that Bitcoin is the highest price at? So we can take a look at that. And so we can take a look at basically max profit for your Bitcoin. When was it the highest this year? And I believe it was approximately, I think we can go, no, we got to go back 3 months here. So the highest point was approximately December 17th. So my bet for me, here's my personal thing that I would like to do this year for me. I think about December 12th to, again, about December 17th, because it's not going to be the same next year. This chart is not going to be the same next year. So don't think that December 17th is going to be the highest day. It could be December 7th. It could be December, I doubt it would be around Christmas, but it could be somewhere around there. So what you have to know is that, you know, you're going to have to make this decision for yourself. But I think around December 12th to December 17th, I will sell Bitcoin, and then I will pick it up when it almost always naturally dips in January. And January is usually the lowest time of the year. However, the FUD increased that time this year, and it was an exceptionally long dip. And so in this case, the lowest point as of yet was about February 5th, sometime around there, give or take. So the idea is to sell your Bitcoin, you know, December 12th or so, and rebuy the Bitcoin when it is at its lowest point about halfway through January. And that would be pretty incredible profit, because if you could sell it here at 19.7 or 19.5, even 19 is fine, would have been fine this year, and then picked it up at way less than half the price, you would have picked up double your Bitcoin. So if you sold 10 Bitcoin, and I know that's a lot of Bitcoin, but if you had 10 Bitcoin and you sold it December for 19,000 and then picked it up at less than half, at about 6,000 or so, you would have well over 20 Bitcoin, and you'd be in a pretty good spot for the next year. You'd be in a very, very good spot, in fact. So that's definitely a good strategy, in my opinion. That's a strategy that I will use in 2018. So I'm pretty much going to ignore most of the year in terms of selling Bitcoin, other than simple day trading. And then I will try to do a mass sell-off personally about that time. But we'll have to see how it goes and take a look at the price as we're getting up to that point. But I believe the FUD is over for now. Prices should start rising soon. You know, there might be a couple extra little dips in there, a little bit of uncertainty as people are buying and selling real quick. You know, they're like scared horses. They're like little rats in the corner, and you know, they're scared investors. So they're buying and then selling real quick. Oh, a little scared. That was scary. That was a scary move. I better try it again. And then people will start to realize the FUD is over, and it'll start to go back up soon here. But I hope you guys enjoyed this video. I hope it taught you a little bit of something. And as usual, I will see you guys next time.